I really don't think people understand because of these two things how much their tax bill would have gone up without the passing of the one big beautiful bill. We're not talking about taxes or overtime, and we're talking about normal people, not the ultra wealthy. If you didn't know this, the Tax Cuts and Job Act of 2017 was set to sunset at the end of tax year 2025. And so there is some key things, standard deduction and the overall federal tax brackets, that would have changed dramatically. Without this tax bill, the standard deduction for 2026 for single filers would have been $8,350. A huge difference because in 2025 for single filers, it is $15,750. So that is a big drop. The reason that's a big deal is because about 90% of tax filers use the standard deduction. And with a lower standard deduction, that raises your taxable income and your tax liability overall. The other big thing that would have changed is these tax rates that we've been used to for the last 8 tax years would have changed back to 2017 levels, which is another big increase to your overall tax liability. Here's a little side by side of the rates under the Tax Cuts and Job Act and then if they would have expired. Now the first bracket would have stayed the same, 10%. But then the second bracket, which affects a lot of people, would have gone from 12% to 15%. Third bracket from 22 to 25. You can look and get the point. Let's do a case study to really see where it hits your wallet. So let's bring those two things to life, the standard deduction and the changing in overall tax rates. I'm going to use a single filer, and the new column is here, and if we would have reverted back, the prior is here. We both make 70 grand. Here's the first change. The standard deduction would have sunset and reverted back to the norm. So under the current one, $15,750 is the standard deduction. But we would have gone all the way down to $8,350, which increases your taxable income because it lowers the deduction you can take. So that's number one. Second thing, here is the different brackets and the income levels of those brackets. And when I put 12 or 15, 22 or 25, the or is when we switched or reverted back to the norm. So you're going to see here the tax liability changes based on the or part. So overall tax liability under the new or current legislation, $6,800. With reverting back, it would have been all the way up to 10 grand. So you got a tax savings without OT, without tips, any of that other stuff, of 3 grand because we didn't revert back to what we had in 2017. I don't think people understand that. I understand people can't see past politics, but I just want to talk about finance and money in your pocket, and just to show you that with the new standard deduction being permanent and the tax rates overall, how much money is going back in your pocket, overtime tips aside. Hope that's helpful. Chris Lee, Everyday Finance, and I will see you in the next one.